When you think about India's stock market, you're thinking about a global powerhouse. But here's the thing. For decades, it's really just been a two-horse race. Now, though, a new challenger is stepping into the ring. They've got a massive war chest and a pretty audacious plan to take on the giants.
So that's the big question, right? For over 25 years, it's been the same two giants ruling the market. Can that actually be broken? This is a total David versus Goliath story, playing out right now on India's Dalal Street. So let's dig in. We're going to look at how this duopoly even got so powerful and, more importantly, figure out what it would take for an underdog to finally land a punch.
All right, first things first, let's get the lay of the land. To really get why this is such a huge deal, you've got to understand the two giants that have been running this show for, well, a generation. Okay, so on one side, you've got the BSE, the Bombay Stock Exchange. This one's the old guard, Asia's oldest exchange, founded way back in 1875. And then, on the other side, you've got the new kid on the block, well, relatively new, the NSE, or National Stock Exchange. They showed up in 1992 and just totally changed the game by bringing in electronic trading. The bottom line? Between the two of them, they control pretty much all the trading volume in the entire country.
So you have to ask, why is this duopoly so darn strong? Well, it all boils down to this really powerful idea called liquidity concentration. Think of it like a popular nightclub. Everyone wants to go to the club where everyone else is. In trading, it's the same thing. Traders flock to the exchange with the most traders because it's easier to buy and sell. It's a cycle that just feeds on itself, creating this massive moat that's almost impossible to cross.
And that right there is the massive dilemma for any new exchange trying to break in. It's a classic chicken and egg problem. You need traders to create volume, but you need volume to attract traders in the first place. So, where do you even start? How do you break that cycle?
But here's the twist. Even with these huge incumbents, India's capital markets, they're really just getting started. Get this, only about 13% of people in India have a demat account. That's the account you need to trade. Compare that to 62% in the US. That gap is absolutely enormous. It points to this incredible untapped potential for growth, and that right there is the opening. That's what gives a third exchange a real fighting chance.
Okay, so let's bring in our challenger, the Metropolitan Stock Exchange, or MSEI. Now, you might be surprised to hear this, but they're not exactly new to this fight. Their story actually starts with a pretty brutal first round against the champs.
So, picture this. It's 2008. MSEI launches under a different name, MCXSX, and they decide to focus on a niche market, currency derivatives. The response from the big guy, NSE, was, well, it was ruthless. They just started offering the exact same products for zero fees. Free! How do you compete with that? You can't! MCXSX's volumes just evaporated. Now, they did take him to court and actually won. The Competition Commission found NSE guilty of abusing its power. But, the damage was already done, and that whole legal mess just dragged on forever.
But that was then. Let's fast forward to today. After years of kind of being in the wilderness, MSI is making a comeback. And this time is different. They are rearmed with a ton of fresh cash and some seriously powerful new friends.
And it all starts with this number, 1,240 crore rupees. Let's be really clear about this. This isn't just a simple funding round. This is a war chest. It's a signal to the market that this time they're serious, they're funded, and they're ready for a long, tough fight.
And you have to see who is putting up this money. It's not just about the cash, it's about who the partners are. We're talking about Peak XV, formerly Sequoia India, and get this, Zerodha and Groww, the two biggest retail brokers in the country. Bringing them on board as investors, that is an absolute masterstroke. These guys are the front door for millions of investors, and now they have skin in the game. They want MCI to succeed. Okay, so they've got the money, they've got the allies. What's the plan? What's the actual strategy? How are they going to solve that impossible chicken and egg liquidity problem we were just talking about?
Well, it looks like they've got a really clever three-part plan. First, like we just saw, they made their biggest potential competitors into their biggest supporters by making them shareholders. Smart. Second, they're just going to pay for it, at least at first. They're launching something called a Liquidity Enhancement Scheme, basically offering incentives to get that initial trading volume going. And third, and this might be the most important part, they're not trying to beat the giants at their own game. Nope. They're creating totally new games to play.
And this is where it gets really interesting. MSEI is rolling out brand new products that the big exchanges just don't have. Things like weekly interest rate futures, that's a first for India, and weekly currency derivatives designed for small and medium businesses.
See what they're doing? They're carving out these valuable little niches, offering something genuinely new and useful instead of just being a cheaper version of the big guys.
And the CEO of MSI put it perfectly. This isn't just about grabbing a piece of the pie for themselves. The bigger picture here is about making the entire financial system stronger. More competition, well, that forces everyone to get better, to innovate. And having a strong third player reduces the risk of having everything concentrated in just one or two places. It makes the whole market healthier.
So, it's a great comeback story, right? It's really compelling. But we've got to be realistic here. The road ahead for them is going to be incredibly tough, and there is absolutely no guarantee of success.
I mean, just look at the financials. The gap is just massive. NSE and BSE are these profit-making machines. We're talking huge margins. MSEI, they're still losing money, still burning through that cash. The people investing in MSEI right now aren't betting on today's profits. They're making a long-shot bet on the possibility that it could become a real contender down the road.
And let's not forget some of the brutal realities they're up against. NSE's market share is over 90%. That's almost total dominance. Then there's the cliff effect. What happens when those liquidity incentives dry up? Are all the traders just going to pack up and leave? And you know for a fact the giants aren't just going to sit there and watch. The second one of MSEI's new products gets popular, you can bet NSE and BSE will roll out their own version in a flash.
So that's where we are. The challenger, MSEI, is better prepared this time than ever before. They have the money, they have the right partners, they have a smart plan. But the question still hangs in the air. Against a duopoly this powerful, is any of that enough?
Look, the stage is set for a really fascinating showdown that will decide the future of India's capital markets. Will this underdog actually land a solid punch and turn this into a three-way race, or will the giants just prove to be too powerful? Only time is going to tell. But one thing's for sure, the next few years are going to be a massive test for what's possible on Dalal Street.